The holidays are usually a pretty quiet time for the markets, right? Well, not this year. Especially not in crypto. It might look calm on the surface, but underneath, there's some serious tension building. Today, we're going to break down what's really going on, because this market is at a huge crossroads, and what happens next could really set the tone for the entire new year.
And this quote just nails it perfectly. Merry Christmas, by the way. But while most of us are maybe unwinding, the crypto markets are, well, they're showing this really weird mix of holiday quiet and this deep underlying tension. It's like the calm before a potential storm. So let's get into what that really means.
Welcome to Crypto Today Simply. Today is December 25th, 2025. All right, let's jump straight into the data and figure out what's happening in this pretty complex environment. Okay, so here's the game plan for today. First, we'll do a quick health check on the whole market. Then, we're diving deep into Bitcoin and Ethereum specifically. After that, we'll look at 3 probable scenarios for what could happen next, and we'll finish up with some ideas on how you might navigate all of this.
All right, let's kick things off with the big picture, market health. The vibe right now is definitely what the pros call a risk-off mood. What does that mean? Basically, people are scared. They're pulling back, avoiding big, risky bets, and just playing it super safe.
And we've got the numbers to prove it. Just look at the Fear and Greed Index. It's sitting at a 27. Now, to put that in perspective, anything under 50 is considered fear. So 27? Yeah, that's deep in fear territory. We're not just talking about a little bit of caution here. This is some serious, widespread nervousness.
So how is all this fear hitting the big one, Bitcoin? Well, it's facing a massive test right now. It really is. The question on everyone's mind is, can digital gold actually find the strength to smash through this heavy ceiling that's holding it down?
And this right here really shows you the tug of war that's happening. On the one hand, you've got a bullish sign. The RSI, which basically tells you if something's oversold or overbought, is down around 30. That's pretty low, and it often hints that things are getting cheap and a bounce might be on the way. But on the other hand, you've got the bears. Bitcoin is just stuck under this massive $90,000 ceiling. It just can't break through. And, maybe most importantly, the big money investors, the whales, well, they've seriously slowed down their buying.
Okay, let's talk about Ethereum. Because if you think Bitcoin is stressed, ETH is feeling even more heat. I mean, this is a true tech powerhouse, but right now, it is staring down a massive fork in the road. And we're talking about 2 completely different paths it could take. This is why analysts are totally split. You've got one group looking at the chart and seeing a broadening wedge. That's a super bullish pattern that could signal a huge jump up towards $5,000. Then you have another group looking at the exact same chart and seeing a head and shoulders pattern. And that's a classic bearish sign that could mean a nasty drop down to around 2,300. So which one is it? A huge pump or a huge dump? Nobody agrees.
But here's the thing. While the price chart is a total mess of conflicting signals, Ethereum's fundamentals, they're looking stronger than ever. It's still the undisputed king when it comes to actual use. The amount of stablecoin money flowing through its network is at a record high. And get this, big banks are actively using it to create tokenized assets, which is just a fancy way of saying they're putting real-world stuff like stocks on the blockchain. This isn't hype. This is real-deal adoption.
So, with all this conflicting info, what are we supposed to think? I mean, where do we go from here? Well, the smart money isn't making predictions. It's thinking in probabilities. And this analysis lays out 3 of the most likely paths the market could take.
And here's how those probabilities stack up. The most likely outcome with a 55% chance is what's being called the New Year recovery. Then there's a 30% chance of something called the deep breath. And finally, the least likely but still possible scenario, at 15%, is the extended winter.
Let's break these down a bit. The New Year recovery, that's the favorite, right? The idea here is that prices just kind of drift sideways through the holidays, and then in January, the buyers come back in force and push Bitcoin up towards $95,000. Scenario 2, the deep breath, is a bit scarier. It imagines one last quick panic sell-off that drops Bitcoin to around $80,000, but then it bounces back fast. And the last one, the extended winter, yeah, that's the one nobody wants. That's where bigger economic problems just keep pushing prices down for months. Okay. So now for maybe the most important part of all of this. What do you actually do? How do you navigate this mess? Let's walk through a solid strategic framework that focuses on a balanced approach.
And the number one message from this whole analysis is crystal clear. In a market this choppy and uncertain, your main job is not to get rich quick. It's to protect your money. Seriously. Preserving your capital is way more important than chasing those last few percentage points of profit.
So what does that look like in practice? Well, the report suggests a pretty balanced portfolio. You've got 40% in Bitcoin, your big, steady anchor. 30% in Ethereum for its huge growth potential. Then, and this is key, 20% in cash or stablecoins. This is your dry powder, the money you have ready to go if we see that sharp dip we talked about. And finally, just a small 10% slice for some of the higher risk, high reward altcoin.
And when it comes to actually doing it, the advice is pretty simple. First, DCA. That just means buying a little bit at a time, regularly, instead of dumping all your money in at once. It's way safer. Second, use a stop loss. Think of it as a safety net. For Bitcoin, you might set it just below 81,000. And third, know when to take profits. If prices do rally, have a plan to sell a little bit, maybe around 98,000 for Bitcoin, to lock in those gains.
Okay, listen up, because this might be the most important piece of advice in the whole thing. Do not use high leverage. Right now, seriously, holiday markets are thin, meaning there aren't as many buyers and sellers. That makes it super easy for prices to flash crash. A sudden violent drop that can wipe you out in seconds if you're trading with borrowed money. It is just not worth the risk. Please be careful.
And last but not least, keep an eye on the calendar. We've got some big dates coming up. Tomorrow, December 26th, there's a huge options expiry that could definitely shake things up. Then, in January, we get key inflation data, which always gets the market's attention. And looking a bit further out, Q1 of 2026 is packed with major crypto conferences, and those often come with big, market-moving news.
So that really is the million-dollar question as we head into the new year, isn't it? We've got this market that's totally gripped by fear, but at the same time, it's got these super strong fundamentals underneath. So what's going to win? Is the fear going to drag everything down, or will a smart, disciplined strategy win the day? It's really anyone's guess.
No hype, no guarantees, just probabilities. See you tomorrow.